Happy Saturday, everybody. Guys, I had someone send me this screenshot. Okay, it's the case for why home prices have to fall. Now, it's pretty compelling. So what do I think about it? We're going to get into it along with other market updates like this insane headline, 142,000 income needed to buy a house in Nashville. What in the world? What in the world? But first, Jerome Powell came off scared at the press conference this week. Okay, in the face of 3 hot inflation reports, he insisted the next move on rates would be down. And that caught the market by surprise. And then the jobs report came out, missing expectations big time. And besides confirming that the ADP jobs report is almost worthless, what does this mean? Well, Anna Wong, who, by the way, might be the best econ reporter that I follow, had this to say on Twitter. Both part-time for non-economic reasons and multiple job holders are very pro-cyclical. Part-time for non-economic reasons make up the bulk of part-time workers, but even that as a share of total part-time has rolled over. Guys, basically she's calling out a leading indicator here. We might be very, very close to recession. Now, does this mean home prices will drop? By the way, she also posted this before the jobs report. This is your infrequently posted reminder that jobless claims is overstating the tightness of the labor market. The number of unemployed that actually use unemployment insurance is now less than 1 in 3. This was actually shocking to me. I did not realize just how underutilized the unemployment insurance is. But basically, we can't look at weekly claims. Now, you know we've been monitoring continuing claims, and I still think the trend there is a very powerful indicator of the local economy, which, by the way, last April, it was trending down. Not this year. It's actually flat to slightly up. It's something we're going to keep monitoring because if this starts to trend up, it could be a major warning sign that not only could there be a recession, but it could be in Tennessee. With all of the scary news about recession, could it give us lower home prices? By the way, my name's Ethan Flynn. I do help cash-heavy home buyers in the Nashville-Franklin area. We specialize in strategic, data-driven approach to home buying with insights you can't get anywhere else. So if you are planning to buy or sell, feel free to reach out. My contact is in the description, and I have a Calendly link where you can directly set up a meeting with me. Does recession equal lower home prices? In the short run, it's very possible, and we will get there. But even Larry Summers thinks inflation is reaccelerating so far this year. He said, note that the ECI has accelerated, which, by the way, that's Employment Cost Index, has accelerated from previous quarter, semi-annual, and annual levels. The home price inflation figures are also cause for concern that shelter inflation is not durably declining. Rents will at some point reaccelerate. Guys, are we starting to see a reacceleration? I've actually had several buyers reach out wanting to buy because their rent is going up. These are for single family homes and not apartments. But even apartments are increasing right now, which, you know, it's this time of year. That's very common and very likely it'll probably peak in the next 30 days. There's still a massive oversupply of apartments, but this affirms that some of the inflation I'm seeing on the ground could actually be sticking and moving back up. So which way is it? Is it going up? Is it going down? What in the world? Well, my personal opinion is this feels like stagflation, if you ask me. It's an inflationary recession. I believe both the Fed and the Treasury are going to embrace any economic weakness to juice up inflation. Like a dovish pivot, which is exactly what he did. The stock market loved it. The NASDAQ popped 2% on Friday. So what does this mean for the Nashville housing market? Well, we just hit a record for April. If the data, which we'll get on Monday, were taken today, we would have $505,000 for the median single family. This is 1% higher than the high of May of 22. Now, there's a lot of debate on whether or not home values are truly higher or if it's the mix. The mix is much different today than it was in May of 22, okay? There are neighborhoods that are actually still down big time from their peak, like Ladd Park in Franklin. I told you it's down 20-25% from its peak. West Haven, it's down a solid 10% from its peak. But our median contract price continues to move higher. Guys, the median contract price right now is $523,000. That's insane. That's almost 5% above peak. And guys, while mix may be at play, it's not all mix. Prices are on the move. They are moving up. However, when we look at demand, we are starting to getting our first indications that momentum is slowing down. Our contract volume has been consistent for the past several weeks. It's been hanging in there, but now appears to be topping out. And we are now year over year about 5% lower than we were last year as of this morning. Okay, so contract volume is starting to sputter. Now, if the 10-year begins another move down, I'd expect that demand actually slows. Now, this may be, if you know you're going to buy, this may be a great short-term window to buy in, because when rates start falling, people actually slow down their buying. It's kind of counterintuitive, but those scenarios where it's getting cheaper every single day, people want to hold off, versus when it's getting more expensive every day, people get antsy and just have to jump in. If you are for sure buying, then embrace the opportunity. As rates drop, people hold off. It's a good opportunity to jump in the market. And personally, I think a drop in yields is short-lived. Okay, and I'm not the only one. Bill Gross, he AKA the bond king, he also thinks bond yields won't drop much. Okay, he tweeted that the 10-year is moving to 4.75. Why own bonds when you can get Treasury bills, short-term yield for 5.25? So just know that nobody knows where interest rates are going, especially your realtor. A lot of smart people think they're going higher. But look, nobody knows where it's going, okay? That's my PSA for the week. I'm sure you were wondering when I would say it. Nobody knows where mortgage rates are going. So why in the world would someone say that $142,000 is the income you need to buy a house? This is dated. It's probably much higher than that, because with the recent price increases combined with a 7.5% mortgage rate, the Dallas Fed is already showing a 40-decade low on affordability. Now add that Nashville appreciation is faster than other metros and still not feeling any relief. Nashville prices are up 55%. You know, the long-term average of appreciation over that same period was 23%. Almost double, guys. It's crazy how much more. Now, one of the biggest drivers for this is migration. And in case you think it's going to stop or reverse, that may be possible, but to give you an idea of the magnitude, the giant wave of migration that is hitting, and I believe will continue, look at this chart. This tiny sliver right here on the right, that is Williamson County, Tennessee. Okay, it's 200,000 plus people, and where almost every inbound buyer tells me they want to live. Okay, and look at the population of these heavy outbound areas on the left. We only need a small fraction of the outbound migration to continue to put upward pressure on Nashville. So the upward pressure of migration will continue and is very likely accelerating. Now, some people are saying it's slowing, and I don't see it, but if you are seeing it, please tell me in the comments. I'd love to know whether or not you think migration is slowing. And guys, this is political, okay? I hate to say it, but it's true. The people from California moving here largely want freedom, okay? They want land. They don't want an HOA. The no income tax, it's nice, but it's more about the government that's not willing to create an income tax that's attractive. It's the culture here. But you tell me, why do you think everyone's moving to Franklin? Okay, truly, I'd love to hear your perspective on it. And by the way, that's why $1 million homes are soaring in Nashville. Okay, look at the growth for $1 million home active listings. If you think this growth means that it's crashing, if you look at it in ratio to contract volume, it's basically flat to last year, meaning even with an increase in inventory, most areas have the demand for it. This is especially true in Williamson County. Now, I would raise a caution flag if you're looking at Rutherford or Davidson. You've got some outsized growth there, and there is some softness. Now, if you're wanting to know where the best deals are, though, Murfreesboro has a ton of assumable mortgages. I'm talking about a ton. Now, this is a view of 2020, 2021 mortgages. A lot of these are in the twos, guys. These are great deals, and you need a strong down payment, but you can pick up a 2.5% mortgage. Now, if you are interested, again, like I said, you'll need at least $100,000 plus on down payment. But if you are, it's the only way I'd do it. Because these are highly leveraged neighborhoods, guys. Highly leveraged neighborhoods, high volume FHA neighborhoods. Guys, these are powder kegs. They will blow up. So if you're not trying to hack in by getting a 2 to 3% mortgage, you're playing a very risky game, in my opinion. The expensive luxury neighborhoods could drop in value, but much fewer for sellers. And from what I can tell, the risk is in the highly leveraged neighborhoods. But you tell me, guys, do you agree with that? Do you disagree? Now, I know a lot of you think the expensive neighborhoods will crash. So, but they haven't recovered, guys. Most of these expensive neighborhoods are still down 10 to 25% from where they were 2 years ago. I think a lot of them are in much better spot. And even in the neighborhoods, that I pick on, I think highly desirable, low leverage neighborhoods are a much better buy than first time buyer neighborhoods with 97% loan to value. I'm telling you guys, those are powder kegs. If you want to know where the market's going to crash, my personal opinion is it's going to be those highly leveraged neighborhoods. The only way I'd buy in them is assuming a 2% mortgage. So what about this chart? Are we witnessing what could be a home price crash? Is it primed? Are we ready? No doubt this is a compelling chart. And I had a conversation with someone. They were renting for $3,100 a month, and they saw a house for $585,000. Now, with 20% down, their payment would have been $3,700 a month. Tack on the fact that there's an opportunity cost of $120,000 down payment, getting 5% interest. It's the equivalent of $4,200 a month, guys. That's $1,000 a month difference for a house that's worth about $100,000 less than where they're currently renting. That's crazy. So yeah, the rents do not make sense for the home prices. And one thing everyone agrees on is that sales volume is low because affordability is absolutely brutal. So does that mean that home prices are guaranteed to come down? Well, if you look at this chart, this is 4 centuries worth of data. Okay, this has been going on for decades. And while home prices seem to be in the stratosphere, if we got another wave of inflation like in 2021, the rent to price number could come back together very quickly. Okay, for example, incomes and rents could rapidly increase like they did in 2021, and home prices could drop. We could see them come together. And I think they will at some point. And it may take several years. I don't know. It could take a very long time. It's hard to imagine that price doesn't take a hit in some way from here. I can't imagine a scenario where home prices aren't flat or declining given the affordability. But that's nationally. And as long as high net worth migration continues, which it can, it's very possible this insanity will continue. And you need to be open to the idea of prices falling significantly too, okay? Both could happen. It could keep going up, they could drop. You need to be comfortable with both. Like this property right here, recently sold for over $300,000 less than what was purchased for in 2022. And if you think it's only the high price bands, look at this property, just sold, was bought in 2022 for $495,000. Okay, so it can happen in any price range, guys. Don't let someone tell you home prices only go up. That's just not true. So with that being said, you guys tell me your opinion. Are we in a recession? And does that mean prices will drop? I'm going to let you guys decide in the comments. I'll respond to everybody. Thanks for watching, and I look forward to seeing you next Saturday.